Hi, this company is selling advanced film and television audition. We evaluated the company on 6 dimensions. Today's speech will mainly from the following 6 parts. Let's start from the first part. Today, I will evaluate the management philosophy and operating style of the Sheridan Audio Visual Ltd, focusing on control risks related to the financial assertions. First, management philosophy. Sheridan lacks an audit oversight mechanism and audit committee, allowing management to influence financial decisions. The financial system has flaws that may lead to inaccurate data and incomplete disclosures. Second, operating style. The company has adopted an aggressive market expansion strategy in Spain. However, long-term debt has increased by 78% and it relies on external financing. Executive bonus are tied to profits, which may prioritize short-term gain over the long-term stability. Assertions, occurrence cutoff, control risk, improper revenue recognition. Financial system issues lead to inaccurate data. Occurrence, revenues may be overstated due to the fictitious transactions or premature recognition. Cutoff, returns may not be recorded in the correct period. Assertions, valuation exceedance, control risk, inventory overstatement. Inventory has increased by 50%, and without the proper impairment provision, it may be overstated. Valuation, failure to account for the impairment could inflate asset values. Some inventory may not exist, affecting accuracy. Assertions, classification, accuracy. Control risk, inaccurate financial reporting. Classification, liabilities may be misclassified, affecting transparency. Accuracy, system errors may cause miscalculations, impacting report reliability. Recommendations, the company should establish an audit committee, optimize its financial system, and strengthens aside management for the long-term stability and transparency. Let's move to the second part.
In this section, I will report on the audit ethics assessment and independent threat analysis of Sheridan AV Limited. First, auditors face integrity risks when management pressure them to downplay financial issues. At Sheridan AV Limited, salary records were left in a shared area, violating confidentiality and threatening financial integrity. Second, objectivity risks arise when auditors have close ties with management or previously worked for the company. Overseeing both payroll and financial record creates a conflict of interest, affecting accuracy. These risks don't exist in isolation, they directly impact audit independence. Integrity risks contribute to self-interest threats. If an auditor holds company's shares or receives favors from management, they may be inclined to overlook payroll weakness rather than enforce stricter controls. Similarly, objectivity risks escalating to self-review threats. Auditors who previously advised the company may later audit their own work, creating bias. At Sheridan AV Limited, large purchases need senior approval but lack independent review, compromising auditor objectivity. These interrelated risks highlight the need for stronger safeguards. Let's move on to the next part.
During our audit planning, we identified the main potential risk points at Sheridan AV. The improper organization management and process control. We conclude this potential risk by following 4 points. Poor vertical communication. There is a disconnect between staff and upper management. The employee raise concerns, but managers like Peter and Harry fail to address them. Unresolved concerns can lead to operational inefficiencies, ultimately affecting financial reporting and compliance. The ineffective delegation without proper oversight. The tasks are being assigned without clear responsibilities or qualifications. For example, Peter delegated stock control to Rob, who lacked the necessary expertise. This increases the risk of inaccurate stock figures, leading to control risks and financial misstatements. unclear politics, and miscommunication of incentives. The company's bonus scheme was announced for every employee, but in reality, applied only to some. Employee dissatisfaction and the risk of employee fraud are motivated by the lack of transparency of employee data. The impact on the accuracy of sales reporting. While various channels like phone, email, online bring in sales orders, there is no systematic way to handle these orders. This means Daisy is handling all channels herself, which increases the chance of errors and mismatches in revenue. The following section will analyze communication-related audit risks presented in these issues and recommend solutions. So we must assess these risks and devise an audit procedure for a successful audit. Let's move on to the next stage.
So for Sheridan AV, they have a weak information system control, which is a significant control risk. The company relies heavily on the procedures and outdated data management practice, which increase the risk of data loss, financial misstatement, and inaccurate reporting. This directly affects the competence, accuracy, and existence assertions in the financial statement. For example, according to rules, computer information and files are only kept by 2 years before being destroyed. This would affect the competence assertion as they fail to return the financial record for a sufficient period, which making it difficult to verify the past transactions. Also, rules say that the company relies on Excel for financial data, and the staff must save regularly and back up their work. This would increase the risk of data loss, which would affect the company's assertion, as the lost file could lead to missing financial records. In the sales process, all the details are manually recorded by Disney Cylinder on pre-numbered paper forms, increasing the risk of errors in order details. This would affect the accuracy assertion, as mistakes could lead to inaccurate revenue recognition, and stock level are checked manually when processing order, increasing the risk that the recorded inventory does not match the actual stocks. This would affect the existence assertion. To mitigate this risk, we need to review data retention policy to assess whether the company complies with record-keeping requirement. Also, we need to select a sample of shipping document and inspect the related sales invoice to ensure the client has matched the document. Finally, we need to conduct a physical inventory count to recognize the stock level with the actual stock level. That's all.
A well assignment of authority ensures that an organization functions efficiently with clear decision-making and accountability. In an audit, we assess how responsibilities are assigned and whether employees understand their roles and authority limited. In segregation of duties, we can observe the sales and finance staff to ensure no single person can control total process. In purchase system, general responsibilities are more concentrated and there is a high possible of error and fraud, which can check by some test of control. For example, we can select a sample of invoice and trace the detail back to the GRN and orders to check the goods are received. In payroll system, employees fill schedule and count hours by themselves, which greatly increase the risk of fraud, and we can advise the company to set up a clocking system. J is responsible for lots of things that have higher risk of going wrong. We can perform control total to ensure the number of employees in payroll system is accurate. And also we can review sample of the pay slip for the evidence of their signature to ensure the calculation have been undertaken. If these controls are very poor, we will perform an additional substantive procedure. The next part is human resource. This company lack of human resource department, which made increased risk of internal control. For example, the management was very unprofessional when recruiting Emily. She only communicated by email without signature and formal contract. Secondly, there is unreasonable arrangement of employee. J often works very late, which can lead some miscalculation of wage. Rosie is responsible, had too much work in all systems. We could use more substantive procedure for this work. Lastly, this company lack of training about ethics for employee, which is key control for fraud prevention, which could put the independence of some employees at risk. That's all.
So in conclusion, we found that the company's aggressive expansion strategy hindered by weak financial and internal control, requiring stronger audit oversight and financial system optimization. Also, Sheridan AV Limited audit must focus on ethical competence and interdependence, with auditing enhancing professional skepticism and following the standards. Then, effective communication in audit planning improve the quality, competence, transparency, and accountability will mitigate risk. Then, weak information system control at Sheridan AV pose a significant control risk, requiring improved data retention, documentation, and inventory checks. Finally, despite the clear duty separation, unreasonable employee work arrangement, and lack of human resource department and ethical training increase the internal control risk. That's all. Thank you.